studying your last two. I swim with tea when they turned in. The staring down to mute. And can learn the pole that some kid died.
In the previous section, we saw how the clearing account helps track investment distributions until the T3 slip arrives. Now we're going to explore something even more interesting. The clearing account doesn't just hold information. It actually tells us information. Many students look at a clearing account balance and see nothing more than a temporary bookkeeping number. They might think, it's just a holding account. It's only there until the T3 arrives. And technically, that's true. But experienced accountants see something much more valuable. They see a clue. Think about the clearing account balance shown on this slide. The account contains $8,750. At first glance, it looks like a simple number on a ledger. But that balance is actually telling us a story about the corporation's investment income and where it currently sits in the reporting process. The first thing the balance tells us is that investment activity has occurred. Cash has been received. Transactions have taken place. Money has flowed into the corporation from its investments. If the account had no activity, there would be no balance to investigate. The second thing the balance tells us is that not everything has been fully explained yet. If every distribution had already been classified and reconciled, the balance would likely have been cleared and transferred into its final income categories. The fact that a balance remains suggests that some part of the reconciliation process is still incomplete. This is why experienced accountants often approach a clearing account differently than students. The student sees a temporary account. The experienced accountant sees information waiting to be interpreted. The balance can help answer important questions. How much investment activity occurred during the period? Has the T3 slip arrived yet? Has all of the income been classified? Are timing differences still present? Is the reconciliation process complete? These are all questions that can often be answered, at least partially, by examining the clearing account balance. In that sense, the account becomes much more than a bookkeeping tool. It becomes a diagnostic tool. It provides insight into the current status of the reporting process. And that's why professional accountants pay close attention to it. The balance is not random. It exists for a reason. It reflects transactions that have occurred and information that is still being gathered. Think of the clearing account as a chapter in a story. The balance tells us where we are in that story. It tells us what has already happened, and it hints at what information is still missing before the story can be completed. The key takeaway from this slide is simple. A clearing account balance is more than a number. It contains information. It reveals where the corporation currently stands in the reconciliation process. And a good accountant learns to read the story behind that balance, rather than simply looking at the amount itself. Now that we understand a clearing account balance contains information, let's take the next step and learn how to interpret that information. Imagine it's December 31st, the corporation's year-end. You review the general ledger and notice that the clearing account still has a balance of $8,750. What does that mean? Many new accountants immediately become concerned when they see a balance remaining in a clearing account. They assume something must be wrong. Perhaps a transaction was missed. Perhaps an adjustment wasn't made. Or perhaps the account should already be zero. But in many cases, a remaining balance is completely normal. In fact, the balance is often telling us exactly what we would expect to see. Let's start with what the balance does tell us. First, it tells us that cash was received. Investment distributions came into the corporation during the year. Real transactions occurred. Money was deposited and properly recorded. Second, the balance tells us that those transactions were tracked. The corporation didn't ignore the distributions. It recorded them as they happened and maintained a record of the activity. Third, the balance tells us that investment activity occurred during the year. The account serves as evidence that the corporation received investment-related cash flows that are still part of the reporting process. So far, everything sounds positive. But now let's look at what the balance does not tell us. The balance does not tell us the exact tax categories. It does not tell us how much is interest income. It does not tell us how much is dividend income. And it does not tell us how much represents capital gains. Those answers are still missing. This is the critical point. The clearing account balance tells us that activity occurred, but it does not yet explain the tax character of that activity. That's why the flowchart on the slide is so important. Investment distributions were received throughout the year. Those distributions were recorded in the clearing account. However, the T3 has not yet arrived. And because the T3 has not yet arrived, the detailed tax information is not yet available. As a result, the balance remains. The balance is not evidence of an error. The balance is evidence that information is still pending. Think of it this way. The corporation knows how much money it received, but it does not yet know exactly what that money represents for tax purposes. The T3 will eventually provide that missing explanation. Until then, the clearing account continues to hold the balance. This is why experienced accountants often view an uncleared balance very differently from new students. The student sees a balance and worries. The experienced accountant sees a balance and immediately understands that the reconciliation process is still waiting for information. In other words, the balance is communicating something useful. It is telling us where we are in the reporting cycle. The key takeaway from this slide is simple. A balance remaining in the clearing account usually means the corporation has received and recorded investment activity, but some important information has not yet arrived. The balance represents transactions that are known. The missing tax details are what remain unknown, and until those details arrive, the clearing account continues to do exactly what it was designed to do. In the previous slide, we learned that a balance remaining in the clearing account often means that information is still missing. Now let's look at the opposite situation. What does it mean when the clearing account balance disappears? Imagine the sequence shown on this slide. At first, the clearing account contains a balance of $8,750. Throughout the year, investment distributions were received and recorded. The corporation knew how much cash had arrived, but it did not yet know the exact tax character of that cash. At that stage, the balance represented information that was still incomplete. Then something important happens. The T3 slip arrives. For the first time, the corporation receives the detailed breakdown of the investment income. The T3 explains how much of the distribution represents interest income, how much represents eligible dividends, how much represents capital gains, and whether there are other components, such as foreign income or return of capital. In other words, the missing information has finally arrived. Now the accountant can complete the final step in the process. The amounts sitting in the clearing account can be reclassified into their proper income categories. The interest portion is moved to interest income. The dividend portion is moved to dividend income. The capital gain portion is moved to capital gains. And the remaining components are allocated to their appropriate accounts. As this reclassification occurs, the balance in the clearing account begins to disappear. Eventually, the balance reaches zero. And that zero balance is meaningful. It tells us that the clearing account has fulfilled its purpose. The account was never intended to be a permanent destination. Its job was to temporarily hold information until the facts became known. Once those facts arrive and the income is properly classified, the account no longer needs to hold a balance. This is why many accountants view a cleared balance as a positive sign. A zero balance often indicates that the T3 has been received. The investment income has been classified. The reconciliation process has been completed. The general ledger has been updated. And the tax reporting process is supported by proper documentation. Of course, professional judgment is always required. A zero balance does not automatically guarantee that everything is perfect, but in many situations, it is a strong indicator that the necessary information has been received and processed. The interpretation guide shown on the slide summarizes this concept beautifully. When a balance exists, information is still needed. When the balance is clear, information has been received and applied. That simple framework allows accountants to quickly understand where they are in the reporting cycle. And this is why the clearing account is much more than a bookkeeping tool. It is also a communication tool. It communicates the status of the reconciliation process. It tells us whether we are still waiting for information or whether the reporting cycle has moved to completion. The key takeaway from this slide is simple. A cleared clearing account often indicates that the reconciliation process is complete. The income has been classified. The supporting information has been received. And the account has successfully performed the role it was designed to perform. In that sense, the clearing account is not just recording transactions. It is helping us understand where we are in the journey from uncertainty to accurate tax reporting.